Anup will have an app to help you spend better. I have an app to help you earn better. But prior to this, I was with Jupiter Money. Did a lot of product initiatives there. I think the problem statement that we are trying to solve at Investmint is that post-COVID, I think everyone would have had one interaction with a broking app. Everybody wanted to try what stock markets were, because maybe they had a lot of time and stock markets were like crazy booming. And because of that tailwind, I think we had a lot of people who thought they were traders, but I think at a persona level, they were trader -1. And what happens is that people know how to trade, which is go on a broking app, click a button and you've bought something, right? But what and when and why is something which is very hard for you to kind of learn over years. And at Investmint, what we're doing is we're building a product that quantitatively helps you to participate with data-backed models, and helps you participate in a way that gives you an edge and maybe a higher probability for you to make a better return. Essentially, if you are someone who's excited about stock markets but has no knowledge, I think this is a great app to start. What we have right now is what we call as models, which is which are the known strategies like momentum. I think you would have heard somewhere, mean reversion, dollar cost averaging. These are known quant strategies that happen to work. It's just that we as laymen don't have time or the knowledge to kind of use that in stock markets and find the right stocks to invest in. What this app does is helps you start following models, and these models give you stock recommendations kind of right now, but eventually you will be able to like use it as a screener, and you'll be able to find the right stocks to kind of invest in the market. So download Kiwi as well as Investmint.
All right. So we'll dive deep into the conversation. Thanks, Anup and Mohit, for joining us today. Just to set a little bit of context, right? Last decade, the number of startups in India have scaled up massively. There are so many new startups that have come up, but there still remains like a lot of macro headwinds, macro challenges, etc. Right? There is the talks about recession, global economy, and within India as well, right? The uncertain regulatory environment. Like for example, the taxation on the gaming apps recently, or the PPI licenses been rules changed by RBI, etc. Right? So there are a lot of these regulatory changes, global headwinds, etc. In those scenarios, right? How are you guys looking at those scenarios impacting your respective startups? Right. So Mohit, if we could start with you, is it looking the same? Are you revisiting the strategies, etc.? We'd love to get a sense.
So I think the space that we are going after, it's a fairly regulated space, right? I would say people who are trying to do some things on the, I would say the gray area, might still have like surprises coming in. What has worked for us is, and I think maybe it's a blessing in disguise, that we were too small to get affected by these as of now, and we are because we are small, we are nimble, we can very quickly adopt to the changes. Fortunately, the kind of approach that we have, the kind of product that we are building, kind of very seamlessly trades through the whole compliances and doesn't get affected. But I understand, I think there are a lot of headwinds. Luckily, the tailwind phase is over, where you get a lot of people who know about stocks and markets. But I think we are going through a time where we have to do a lot more to kind of educate people and to give them the confidence of how to responsibly and in a more systematic way participate in the markets. That's what that's how we are kind of operating.
Got it. Interesting. And Anup, if you could add a little bit of context from your end on these things, as well as from LazyPay as well as Kiwi, right? Are you seeing the user behaviors also change, or they are same or different? The macros are changing and they are impacting the user behavior, spending, etc. Or like how is that like the scenario compared to your previous experience and now?
So I think there are two questions. One is how's the macro shaping our strategies, and the second one is how's the regulatory landscape impacting us. So on the regulatory side, I was heading LazyPay when all this impacted us massively. Every day, media houses chasing us. Look, whatever don't kill us in a consumer business makes us stronger. Uh, the laws, the compliance will keep on changing. It will be dynamic. We will operate in the zone where we will be ahead of compliance in some ways, because we are innovators, and some of the compliance, some of the laws will impact us, but it cannot deter us from innovating in ways which solves for consumer problems. So it will continue. I don't think so. There's a lot of information around us. That's why we feel a lot is happening, but I think it has always been there. But I think fundamentally nobody is going to stop because there were recent guidelines coming in which impacted us adversely, and that is one of the reasons I started Kiwi. I'm sure there will be guidelines there in future which will impact us, but it's fine. So that's on the regulatory side. On the macro side, I think again startups are getting created every day. I'm talking to a lot of investors. The momentum is not changed at all, at least in India. Globally, there is you can find some momentum which has reduced, but not in India. So yeah, I don't think so. India is still remains one of the very bullish markets from everyone's perspective. There's a lot happening here. The consumer spends are going. You must have looked at all the indicators with regards to India. All are healthy. So India remains the bright spot. So that continues.
All right. And Siva, if you can add your context, right, talking to various customers.
I think I would probably voice on what you've been talking about. There are no two ways about it. I think the app ecosystem is here to grow. And if you look at, be it on the devices, be it on the way that consumers are responding, a lot of, if you look at 2022 as a year, 75, I'll put it the other way around, only 25% of installs kind of were coming on from the top 10 metros. And the real growth started happening in the tier 2, tier 3 cities. And even if you look at the app stores today, earlier there was a phase when if you have 200 trending apps, probably 30, 15, 20% were made by Indians. Now, if you look at it, it's like more than 50% top, above 50% is where are built by Indians, are trending in the 200 plus.
A lot more are vernacular as well.
Yes, a lot of them. So there's no two ways about it. It's going to grow. What we have started seeing is the way that the startups have started looking at data, or probably the metrics that they used to have for success has completely changed. Now, they want to be very sure in terms of where they spend. They want to kind of grow sustainably. I think we've been talking about it. And one thing that we've also seen is three things always stand. Everybody talks about what's the CAC is. Everybody started talking about how their LTV is going to fluctuate. What do they need to build on LTV for them? Obviously, ROA has been there for a long time. And probably I'll quote an example from a fintech customer, because we are sitting with the fintech folks here. One of the fintech customer into the credit space, they started kind of seeing that the growth was trying to plateau. And good part about startups is they're always ready to experiment and try for new pockets. So one thing that they started doing is they started looking at the tier 2, tier 3 markets. They know that the requirement would be a little more different and difficult to get them. But when they started running these smaller pilot campaigns, they understood that if they're able to make a smaller tweaks in terms of what they're offering to them, the responses were good. And in time, they started seeing again the same thing, 70% and above users were started responding to them. And with this, they were able to kind of modify one on the positioning of the product. Two, they were able to get the right pulse of these users. With this, they were able to kind of do three major things that every startup, I'm very sure every startup that is here would want to do that. One, they were able to have a much better retention rates. These retained users kept coming back for more services to these platforms, and this actually led into a better LTV. And once you actually kind of crack these two things, you are able to solidify your position in that particular market. And if you're doing this first with your peers, then you always have that first mover advantage. So I think this is something that we are seeing, that data is changing, the way that startups are looking at data is changing, and whoever is able to make those first tries into these segments are able to reap those benefits.
So I think there were like 3-4 broad topics that came out, right, in the context in the first conversation. We'll dive deep into each of them step by step, right? Starting with the first one, which I'm sure most in the room would be resonating with right now, which is marketing budgets are being relooked, they have been slashed or maybe cut down. The CACs are shooting up, aggressively. So that's like a two-sided problem. And then in that case, how do you drive acquisition? And how do you maintain the growth momentum as well, right? It's very tricky. So Mohit, going back to you, if you could share a little bit on these things, right? How are you looking at acquisition, marketing spends, growth momentum, etc. Yeah, would love to hear your thoughts.
Yeah, I think right from beginning, at least at Investment, we've just focused more on, I would say, the organic or the more, I would say, sustainable channels right from the beginning. I think one of the first things we did was to build a community, and it thrives right now. Like, people bash us openly if something doesn't work. And not kidding, but my co-founder Akash is probably the only guy who's like, he will be responding at every escalation that comes in. Even today, we've got 5,000 members there. 9 o'clock market opens, and I think from 8:30 to 10 o'clock, it's a bloodbath. But we love it. They give us a lot of feedback. They become our evangelists. They keep talking about the good. They keep giving us real feedbacks that if you go and ask them, you don't get it. So from a growth point, it's like a win-win for us. We get users who could just vent out if something is not working, and once they went out, they get a resolution. They're still back on your side, and they're like, yeah, these guys are figuring it out, so give them a chance. So that one. Second, they get to talk to the founders, the team. I think we have two superstars from our team. These guys, one of them drives the growth, one of them is an engineer, but nobody shies away from like picking up Telegram, our group, and just talking to the customer. So that's one. Second, I think that's worked well, and I think it's a common knowledge, but I think referral kind of works very well for us, given we are in a space that fintech has kind of, people understand things around money. One of the things that we did is, because we were into, stock markets, our referral program is to get you stocks. And so, yeah, I think these two things have always been one of our cores that we wanted to drive it. If you ask, I think we focused on partnerships, communities, referrals, things that kind of scale, not just from money, but from like long-term involvement, time and everything. And hence, I think when you talk about CAC, when you talk about ROI, I think we're very close to, and I think we've just crossed 2 lakh users. And I think I can pretty much say, without revealing the numbers, that we have a very, very healthy CAC, and pretty much very sorted with regards to our acquisition strategy.
All right, looks quite interesting. And going back to you, Anup, right? You were talking about few things, 10K users within first few weeks of launch, right? And then things like you talking about growing in phases, sustainably, etc. And then things like organic channel, right? So how does all of these things look in your scenario? What's the acquisition and growth plan like for Kiwi in the next maybe 6 to 12 months or so? Are you looking at organic and then inorganic as well? We would love to hear your thoughts on these topics.
Yeah. So I think growth at all cost is not an option anymore, right? Fundamentally, everybody, be it investors, be it your own thesis about as to how you are going to build the business, doesn't work with that construct. So growth at all cost is not an option. So then you work backwards to see what works for you. And fundamentally, when you do marketing, you are basically solving for discovery at the end of it, right? Fundamentally, the product should work and the funnel should take care of it. Fundamentally, you're solving for discovery. So I think, at least while we have not spent a lot of money so far, but the way we are thinking about it is, ultimately, we want to reach to a place where 80% of our customers are organic. So how do we do it? And we have done it in the past in my last organizations as well. What you solve for is brand. I think it's important to solve for brand, ability to connect with the audience or the target segment group. So our thesis is to invest a little bit in brand, make sure your TG identifies with you, and that's where we're going to spend money fundamentally. Not a lot on performance, while that might be one of the channels, but we are not super bullish on that particular aspect. But yeah, brand is going to be one of the areas we will invest.
Got it. And Siva, in your case, right, you've been talking to different customers, etc. Do you see a lot of changes in the way marketers are looking at acquisition, growth, etc. Right? Or it's still on the similar lines what used to be maybe a year back or so? How's it like?
So probably I'll talk about the marketing budgets first. I don't think there is any lack of marketing budget, to be very honest. But everybody wants to make sure that every single dollar that goes into the marketing budget gets them the kind of ROI that they're looking for. So I'm very sure a lot of people in this room would be planning for, okay, what do we need to do for the festive season? What are the ads that we need to run? If any gamers here, I'm very sure World Cup, Asia Cup, pretty exciting for you guys, right? So there is money in the market. There is advertising budget that people are going to want, but everybody has become very, very conscious in the way they want to do this. There is a consolidation in terms of, let's say, if somebody is using 10 different ad networks in the past, now they've been very, very choosy and picky in terms of where they want to run. This is the first thing. Second, obviously, from AppsFlyer, we also try and help advertisers to look at by publishing something called as performance index. Let's say you have a particular category, particular thing that you want to run. Which are the networks that you need to look out to run for? At the same time, I think startups are also going back to the basics to make sure that there are some traditionally rich channels that they need to leverage. One of these, I'm very sure influencers have been there for a long time, but I think we are also seeing brands not going to these larger traditional influencers, but they're trying to look for more niche and micro influencers who have a very smaller set of audience, but they have a very high engagement rates. One, the cost of acquiring these users is much more, I say, affordable to get them on board, but they have a high engaging rate of users that they can come in. Second that we've seen is, again, a fintech app. They were in a pre-launch phase. The first thing that they did is they made sure that the referral was going in. And the amount of the first thing was, even if it's a pre-launch, I want to make sure that they are going to refer everybody that they're around with them. So this is, again, a lot of customers trying to do this. Three, we all know that we are talking about app first today, but traditionally a lot of us would have moved from probably a web or an M site to an app. What has happened is, in the chase to have the app first thing, I think a lot of us has forgot about the users that used to visit our M sites. And there is a good, healthy amount of users who still move from your M site to app. So this is one of those segments that we have again started seeing customers going back and cashing on that, you know what, there's good 20% of users that I can still move them from M site to app. And I would still call them as double opt-in users, because I'm going to your website, I'm looking at it, I like what you have in your website, and I want to then convert to an app. So these are more potential users that you use. So I think these are few channels that a lot of startups are banking on to make sure that they've got those rich users at the very start, which will, we were talking on that the amount of retention rate that these guys will give you would probably not be the same that you would find from a acquisition that you do from an ad network. And when people are also kind of spending, we also seen that people have not been conscious about uninstall rates, because it's first thing to get them on board, but let's say you have the same leaky bucket when you get them somebody on board. It's disastrous when you kind of look at your marketing budget. Today, I think India ranks second in globally in terms of uninstall rate. It's 42%. And if you look at the 42%, again, we have got the fintech folks. So out of 42%, 80% of people leave on the first 7 days. So again, it goes to a very fundamental thought. Okay, I've acquired these users. What is my retargeting window? What is my remarketing window? How sustainably can I do remarketing without probably annoying the customer so that they don't churn? So I think these are few elements that we have started seeing in the market right now. And probably the upcoming festive season will give us more idea of how.
Which is the country ahead of India?
Southeast Asia. So they're shy. We like just we are there. So probably next report, probably we'll be there. So yeah.
So a lot of education, awareness creation probably required, right? And then diving a little more deeper into the topic again, right? We heard about growing sustainably and things like that. So Mohit, back to you. How do you look at growing sustainably, one, And two is things like retention, engagement, how much importance they play, especially when you're less than a year old as a startup, right? We would love to hear your thoughts on both of these things.
Yeah, I think something that works in the space that we are in is that it's a regular use kind of a product, right? Unlike a ticket booking, right? I still don't get why Make My Trip would make an app if I have to book maybe one or twice a quarter. I would rather go on their website and do it. For us, it's a trading based platform, so you would want to kind of be actively involved. I think applies for Kiwi as well, right? So for us, I think from the very start, I think we were very sure we were going to be an app based product, right? And I think, like Shiva said, I think web kind of just helps us just become a top of the funnel, nothing more. But I think from like a sustainability point of view, our focus has been, I mean, it's a very cyclic business, to be honest. Markets go down and people stop trading, which is a very common and very general knowledge. And when markets are bullish right now, we see great participation. So yeah, we have to understand that these things will come in, and hence we cannot unnecessarily start try to bring growth at any cost. Right. So I think our focus is just to kind of be nimble, understand how the markets are, and continue to just stick to the basics of how we can build it with community, because our product is not very I mean, markets in general and by default is not so simple to kind of understand, right? And hence you need a lot of hand holding. So we continue to kind of do those things so that people start building trust on us. And I think once you have the trust and once people believe that, okay, this is something that I should, of all the options that I have, this is something that I can give it a shot, I think you have a sustainability angle playing very well for you.
Got it. And Anup, in your case as well, right? You're talking, still early days, but you're talking about day 1, day 7 retention cohorts, etc. So seems like one, you were also talking about organic growth, 80%, so how do you drive that sustainable growth? And two is, it also seems like retention, etc. is a focus area from you, maybe from day 0 or day 1, right? So how are you looking at growth and solving the retention piece? How important, where does it rank as well for you?
Yeah, so we are a transaction app, right? Ultimately, we are UPI app, and it's a daily use product. So it's super important that customers are talking to us. They're using our product. So retention is paramount because the entire profitability or the business model pegs on retention. So it's important for us that we grow only when we are sure that things are working for us. One of the reasons why we are so paranoid about daily retention, the first thing I go in the morning and looking at the retention rates. How is my daily retention rate moving, and is it going up, flat, down? Every day 5-10 users we are calling to figure out who has not transacted yesterday, why hasn't they transacted with us. So it is, our company is super paranoid about retention because that's what is going to make or break things for us. So this is super critical for us. I think that should be the case with majority of the companies. I think if you are unable to retain users, getting everyday user, daily you get new users and it's a leaky funnel, the business is not there. So yeah, I think.
Yeah. So actually, counterintuitively, so WebEngage also, so we're in the business of driving retention and engagement for your consumer apps and consumers, etc. About 12 to 18 months back, we used to see, while conversations with startups, etc., we used to see that a lot of startups not putting a lot of importance on things like retention, etc. Those things taking a backseat in terms of driving growth, etc. So it's good to hear that retention is, now becoming a focus point of the startups that are, coming up in the last year or so. And then Siva, in your case as well, right? What used to be maybe a year or two back and now as well in terms of driving retention, retargeting, do you see things were different before and things have changed now? Or they are still similar where retention is still like a small area, maybe not the talk of the town, etc. What do you see?
I'll probably have a longer answer this time. So I'll probably categorize.
You thought you did not have it the last time.
Good one. I'll probably categorize into three phases. One, when we start seeing looking at a larger matured startups, what we see is 50 to 60% of their focus kind of goes into retention and re-engagement as a whole, because they're in a phase where they've got enough number of customers that they want to focus on because they've already spent enough dollars on them to acquire. Second, what we're also seeing is these traditional old companies who have been legacy and they're now moving into the app space. What for them the definition of retention is: do have a very good onboarding journey, do have a seamless customer experience. I was talking to Anu and I was like, your onboarding journey, it took me like 2 minutes to get onboarded and have a credit card. I think this is the fastest experience that I had to get a credit card line. I was looking at the Investmint app and it had a very seamless UI for a user to understand what is good, what is bad, what is not. And if you look at the same one of traditional apps today, for them, retention is if I don't have my app sorted, I don't have my users on board. So third is the young startups that are growing today. Everybody think, they get that dopamine effect if I get more number of users today, but they kind of miss on the most important piece, that I need to also retain these users and I have to allocate a particular budget to make sure that I'm retaining these users. There is a 35% dip in the users that are retaining on day 30 today already. And if you listen to the numbers, it's 1 to 1.5% retention rate on day 30. And to be honest, I was surprised to look at it. iOS has 3 times more retention rate, even they have a very smaller base in India. So I've seen users saying that my retention is on Android, not on iOS, because iOS users ऐसे ही खरीद लेते हैं. It's not really true. It's very important that, again, it depends on your app to app. There was a food tech app which told if my user is not making a purchase in first 7 days, they're lost for me. So when do you retarget? When do you kind of retain them? And we are seeing this trend is picking up. There are higher number of re-engagement that are happening today. And we have also seen a user who is being re-engaged has 2x likely chance of making that next possible move that you want them to do, in case we don't do that. So this is a very significant thing that we have started seeing, that with limited budgets, I would not say limited budget, but capacity to spend in terms of where they want to see ROI, re-engagement has been a very sweet spot for the startups. And few of the startups, the conversions that they're getting from re-engagement are higher than what they're getting from UA campaigns. So this is also a significant shift, but only caution is make sure every time you run a retargeting campaign, there has to be a significant incremental delta uplift that you need to do. Otherwise, this goes like, customer is anyways going to transact, but I still want to tell him, bhai, transact kar le. It doesn't work like that. So if you overdo it, then you look at more churn. So it's a sweet spot that you need to figure out how many times you need to do it and when you need to do this. But this is a no-brainer that everybody has to start working on re-engagements.
All right. Brings me to the last question for the topic or the conversation. Right. We were talking about the macros and headwinds, and then micros, and how do you guys are looking at your strategies, etc. So Anup, back to you. What are the top couple of priorities for you guys at Kiwi that you're looking at next 6 to 12 months at least, right? That this is what we are going to prioritize or focus on right now.
So I think for that, it's very important that we define our vision very properly. What are we working for? Ultimately, we are working for enabling the next 35 million users to get a credit card. So with that in mind, the most important thing for us is to solve for bank. So another data point over here. So take any bank who is issuing a credit card, they are solving for their existing customers. And the banks which are not offering credit card, they are unable to solve for their consumers. So fundamentally, what we have to go and solve for the customers like the likes of Karnataka Bank and the Canara banks of the world. So that are the consumers. Those are the consumers we are solving for. Who are those consumers? Those consumers are like the SMEs in Bhilwara and their employees there. It's not that they are not earning. It's just that they are not served properly. So those are the customer segment we are trying to solve. Those are the so we are solving for those bank supply in some ways. So yeah, focus is to how to solve for that vision, and working backwards from that vision is super important for us.
All right, interesting vision as well. And Mohit, back to you, right? What do you look at, like the macros, micros, keeping those in mind? What do you look at, top couple of priorities for investment? How are you looking next 6 to 12 months?
A lot of building here, a lot of product building. Honestly, we have so there's like the lowest point in every startup, and just there are crest and troughs, right? And hopefully we pass that, given the phase that the macros kind of are showing. But we are just heads down, focusing on building the product, improving it now. We've got enough customers to tell us what's working, what's not working. So I think the next 6 months would be a lot of improved product lines that will come and help users understand the markets much more better and much more easier way. We want to kind of reach to a place where we should be the only app that you need to kind of do anything that you want to do in the markets as an active investor. You want to, I mean, the way we look at it is maybe yes, your 80 to 90% of your money would go into mutual funds and traditional long-term investments. Do that by all means. We don't want you to kind of take that risk. But that 10% of your money that you would want to generate an extra alpha, we should be the only app that you should look at. So next 6 months would be, hopefully the markets keep rallying up, more users come in, and that gives us the confidence to build more, build better, improve our product. We've had good problems to face, like more number of users and apps slowing down and things like that. So next few months would be just improving it and making it very seamless.
All right, amazing. And maybe just summarizing the takeaways for us and the audience, right? One is we spoke about, the macros and how do you look at, everyone is now looking at sustainable growth, etc., right? Which is there. Retention rates, building community, organic growth, those things are very, very important. Looking at uninstalls, retargeting efficiently, etc., right? For sure. So I think exciting times ahead, as well as a lot of things changing in a fast pace, right? So yeah, thanks Mohit and Anup for joining us and those interesting insights. Maybe what we'll do is we'll open up for a quick 2 to 3 questions if we have from audience would like to ask or understand anything. Yeah.
So I have one question. Hey, hi everyone, I'm Anup Agrawal. I have one question each for Mohit and Anup. So Mohit, for you, as you grow, right? From what I understood, right now you're providing an edge to people who are trying to trade, right? Eventually, as you grow to a significant base, right? Now, like how will the edge come? For example, as the base grows, now there are enough participants in the market who are investing through you, right? So that segment might itself become big enough, right? So how will that edge come later? Two, for Anup, I just want to understand that eventually, right, we're looking at RuPay credit cards, which would also come, who would also like be on UPI, like credit card on UPI, right? One thing that I understood from the talk is probably you're looking at the segment itself as the differentiator, right? Maybe that segment, some level of personalization, but what else do you see? You also mentioned brand, right? That I see that maybe these two are the things that you're looking at as differentiators, but is there anything else that you think would be the differentiator once the competitor starts rolling out their product as well?
I will let Mohit shoot first.
Yeah, I can even answer for him. I mean, credit card, credit on UPI, I mean, it's a hot space, but yeah. But yeah, for us, I think yes, the problem with scale will come, and hence the way we want to position ourselves is like a smart screener, not a recommendation engine. If I tell 100 people to buy HDFC, it still works. But if I tell 100,000 people, we are doing something wrong, right? We are essentially moving markets, which should not, and which doesn't work. So what we are essentially doing is we have, and just to understand, I think the market is huge, right? it's so huge that it will not matter that whether market is bullish or bearish. There are always good opportunities. So as long as there's no dearth of opportunities, I think we don't have to worry, because the kind of product that we are now envisioning, the screeners and the easy way that you can kind of look for your own preferential ways of trading will be so different from maybe the person sitting next to you, that this problem will not happen. And eventually, I think everybody will have their own way to screen the market. Everybody will have their own thesis. We are just allowing them. I mean, imagine like how you have a screener.in, right? You go, you make hundreds of charts and lines and this. You don't need to know that. And we are trying to make it just for a persona, just below that, which doesn't want to kind of, I would say, doesn't have the time or doesn't have, the current right now mindset to kind of do that. So we'll have screeners that allows you to have, endless number of permutation combinations, and will allow you to kind of, invest in your own thesis. So I don't think with, the kind of product that we're evolving to, the problem with scale will come.
Yeah. So in our case, look, the problem is very, very large, and it will attract a lot of players into this problem, right? Just to give you some perspective on the numbers, UPI P2M is about 4 lakh crores a month spends, right? MasterCard, Visa, the card itself, debit card and credit card combined is about 1,70,000 crores, out of which 1.4 lakh crore is credit card. So credit card takes up a lot of percentage of digital transaction via card. The same thing is going to happen with UPI. UPI will push the commerce significantly. This 4 lakh crore will move to 7 or 8 lakh crore in the next 3 years. And a large portion of that will come on UPI credit, because it's fundamentally, a credit is a far better product to transact than your savings account. Most of you have a credit card here. So a large part of that commerce is going to go into credit. So it is going to be a large market. My estimates, credit card market in India will quadruple in next 5 years. So we are talking about a very large revenue pool as well. So this will definitely attract a lot of large players into this. And that's why we have chosen a problem which is a very different problem. What we are seeing is the already served customers are going to be served in an insane way. You guys will get a lot of options. So we are working backwards for solving the next 35 million. And we believe that fundamentally UPI credit card solves for that problem, because if you go to a tier 3 city, town, not city, you can only spend on UPI. You can't spend on a MasterCard, Visa card. One of the reasons why it has not penetrated in tier 3, tier 4 levels, people have never demanded for that product that deeply. Bajaj EMI card used to do their job, and I've spoken to a lot of consumers there. So with UPI credit card, there will be a lot of demand from that side of the country. And if we can enable the right banks who has the right risk appetite, we will solve for those consumers, and we will stand for that. So that is the idea. It is a big problem to solve. We are in the journey. Hopefully we'll solve it meaningfully. That's the idea.
I think we'll restrict it to one question each, right? Just in interest of time.
This is Arjun from Nonprofit. So I see a lot of variations in when you are talking. So I feel there is now Shiva was mentioning there is enough money in the market. People are pumping. It's right time to grow and things like that, right? But Mohit said it's time to slow down, focus on the product. It's automatically evolves, things like that, right? Now my question is, especially in fintech, right? I see, as myself, I never been a loyal for the fintech industry as such as a concern. Consider that credit was very popular and I was continue using it, right? And then the way you said refer a friend, I was literally referred 5 of my friends because 1,000 rupees they were giving me as Amazon voucher initially when they have started. I literally installed in family members 4 codes and I got 4,000 rupees. Okay. Then the way it is now, their cashbacks from 20 rupees to 1 rupee it's fallen down. Okay, for whatever be the reason. Then check has come in picture. They started giving again excess money. I literally stopped credit fully and then moved to check. I see there is no loyalty in such. As such in this fintech, the products are also evolving so well, right? LazyPay, I didn't get the opportunity to use it, but I know how popular and how effective it is people are used to pay things like that. So my question is, the competition sharks, they know CAC, how much they are spending, it's how difficult it is. So is it make sense to burn so much of money and raise new customers, or evolve slowly?
So the way I always look at it, I always try and create a elasticity measure to offers for users. So you need to have a metric as to how elastic the consumer is to that offer. So you seem to be super elastic to. I would like to have consumer who thinks fintech product like their toothpaste. How many times do you think about your toothpaste? And people, we are, we look around and we find folks similar to us, and we think that the world is like that. And I can tell you this from experience, that majority of the consumers don't think about product so much. They are not super psyched about that $50. Majority of the users. So you need to figure out that you have good balance of those elastic and inelastic users. If you have created a skew massively towards the elastic user, you will have massive retention problems as you reduce their offers. So one has to have those metrics right, identify the right customer persona, and ensure you are getting the right consumer. And if you're getting that wrong, fundamentally, you don't have the right business model.
I think another angle to add to this is, are you building a painkiller product or a vitamin product? If you're building a vitamin product, of course, you will spend more, and the elasticity, like you said, I think customers will not stick. And if you build a product that truly solves a problem, truly solves a pain point for a customer, I think even with lower gratifications, I would say, customers stick around because the intrinsic value is more than the extrinsic value. So it's about figuring it out. Where do your product stands for? I think you would know, but when Uber started, they were giving 600 rupees for referrals, right? But Uber still survives. Maybe you might not say same for credit. I hope it does, but and you can see, because Uber was solving a pain point. Now a lot of people can't imagine cab hailing in any other way than just opening up an app. So maybe that's also one angle that you should look at when deciding whether you spend more or spend less. And just to add, I think AppsFlyer have very wealthy clients, so that's why they know that they have money. Smaller startups, no, we're still being frugal.
So I'm from the laundry industry. Say there are 5 big players who had come and pumped money, but they're no more now. So we are there in the industry from last 4 years. As Mohit was, as Shiva was mentioning, the retention will happen. So the second time when the customer comes, they really stay. So we have a lot of customers where we have seen in the journey, they exit for a moment of 6 months, but we have seen the customers who is coming back even after the year.
So I think those are kind of customers you would want to go behind.
Hi, I don't think we can use. Yeah, cool. So I'm Sakil from Bitsy. We are a Bloomberg licensed crypto mutual fund platform. My question is to Anup. I was a regular user of LazyPay.
I would like you to shift your loyalties to Kiwi.
I'm just trying to understand, from a regulatory perspective, what went wrong for LazyPay and how are you solving that at Kiwi?
Again, I don't think so. When we were making this LazyPay credit card back then, LazyPay card, and we had that debate as to this looks like a credit card fundamentally, and then we went to first principles to see why RBI regulates a credit card so heavily, and what does that we are doing differently. Credit card has a systemic risk, right? What happens is you spend today, the merchant will get the money next week. If the bank is unable to honor that commitment, you create a ripple and you kind of create the market instability. And a PPI card is actually funded before the transaction has happened. So we believe that theek hai, ho jayega. But there was one more angle to it, which was credit line, which we missed. Credit line also create a systemic risk, which is basically when you say that you have a line of 2 lakh rupees, and you say that over 1 million consumers, your exposures are much more than actual balance sheet you can support. So anyways, RBI said, I think there was some learning for us there. So sorry, I forgot your question.
I was asking how are you solving that problem? The regulatory issues at Kiwi
Huh.
should have impacted LazyPay. How are you thinking and solving those differently right
So-
now? Or is it again uncertain, things might change?
I think now it's very regulated.
Yeah, I think what has happened, as Mohit is saying, regulatory clarity has also come in. I think there has been a lot of innovation in last 3-4 years before this regulation came. People were trying different stuff. And the way RBI also operates, till it becomes large enough, RBI doesn't intervene. So when things became very large, the PPI cards the monthly transaction volumes were touching about 5,000 crores back then. The cumulative number of cards between Slice, Uni, and us, LazyPay, we were bigger than HDFC and ICICI combined. In the monthly basis, the number of cards we were issuing. So it became too large for RBI to not notice, and that's why whatever regulations came to guide us in the right path. I think we have learnings from there. We are much more cognizant about what we are doing. I think there are no regrets in any ways. I think we pushed the pedal. We saw that there is an opportunity, and I am building Kiwi after seeing that opportunity. That there are a lot of consumers who want and love a credit card product, doesn't have access to it, and we can solve for that. So yeah, being much more cognizant, if that's the point.
Questions?
Question to Anup. So you might get anything after this. So
I think I've met you.
yeah, we met before. We met at many parties, no? So my question is about over underwriting, right? So example, I'm not issued a credit card yet. I have an SBI credit card, but no other company is issuing me a credit card. So underwriting still remains a problem. So when you say you're going to target the next 35 million users, how are you going to do that? Because banks don't like issuing credit cards to people in tier 2, tier 3. So example, my company is registered in Bijapur. None of my employees are getting a credit card because my company is registered in Bijapur. You got my point? So that's a problem. How are you going to solve for that?
So in which bank do you,
Bank with.
bank with?
ICICI, RBL majorly.
So you have your own startup, I know that.
Yeah.
So what we have seen, and this is basis data, that so I'm talking about let's say bank A between the top 4, actually top 3 private banks. Today also the 80% of their credit card issuance happens to their existing customer base. I'm surprised ICICI is not solving for you particularly, but they have been fundamentally good in solving for their own consumers. What they haven't been good at is solving for if you were a South Indian bank customer, or some cooperative bank customer, Maharashtra bank. So those are the gaps which we see, very, very large gaps. I'm surprised as to why ICICI has not solved for it, because they must be seeing salary debits, credits every month. So I'm surprised why they are not solved for it. But ICICI should ideally solve for it. This is generally an edge case, or maybe a very small pocket. But what the biggest gap is, customers from different banks they haven't solved for. So the way we are solving for it is going and working with other banks and getting on to their consumers. And generally what we also seen is banks' primary key metric or North Star for a bank is cost of capital. And private banks are particularly massively sensitive to this, because their cost of capital depends on unsecured loss rate and all of that. Whereas PSUs, they are not so sensitive to it. They are relatively less elastic to it, because their rating is derived from Government of India. So if you look at the loss rates for PSUs are generally higher. So their appetite, even if it makes risk-reward ratios make sense to give you a credit card, private bank might think twice, where PSUs can be a little liberal. So one of the other ways we are solving is seeing if we can work with PSUs, which has a little bit higher appetite for risk. So we have started the journey. A lot of questions to be answered. I won't say I've answered all of it, but those are the paths we are exploring.
All right.
right? So I think we'll take the remaining questions offline. Thanks, Mohit and Anup, for joining. I'll let Siva quickly do the closing, and then we'll quickly gather in for a group photo before we open the night.
WebEngage. Retention simplified.